There is one stock to buy if you missed Nvidia. Nvidia broke its $200 level on their Global Technology Conference day. Trump and Xi are in agreement about shipping soybeans from the US to China for the next few years. Relations are strong even after we've gapped up in the market 5 days in a row. The ticker to watch is not Nvidia. It is a cloud storage company. It's STX Seagate. All of this AI, all of this data needs to be stored somewhere. And this company, Seagate, just beat on earnings and revenue. And they have one hyperscaler customer. They didn't name who it was, but they spent a lot on hard drives. This isn't financial advice. Let's jump into the charts right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little info about Seagate's recent results. We can see it on the chart. It's $2.61. That's the beat. Right here. Earnings per share is $2.61. So obviously this is wrong. This is for Q3 of 2025. Yeah, for the quarter ending, whatever. The earnings that just happened. They have a lot of revenue, $2.6 billion, 21% year-over-year beat. So they beat on earnings per share and beat on revenue. They also have strong guidance. So basically everything good about earnings that you could have, they had. And if you look at the stock price, it acted that way. It's over this peak at 270. And if we look out on a 5-year chart, this thing is parabolic. If we look at just the last few months, it did go up in September with the whole market and came down after their dividend, and it's kind of offering an opportunity to buy. Now, why Seagate? Why this company that went from 75 to 280? Well, a lot of companies went up with Nvidia during that period after the tariff lows. Not just hyperscalers like Google, like Amazon, even to some extent. You can't predict these earnings reactions. Some people say they can, but this was pretty difficult to predict. This was the Meta tax hit they took on this earnings. So, if you miss a move like Nvidia, if you miss this breakout, that's perfectly normal. If you miss Palantir, that's perfectly normal, this breakout. You can't always predict these. All you can do is get in at favorable opportunities. And I think right now is an opportunity because once earnings reactions are in, then you can buy risking where all this volume is here on this big candle. At risk $5, try to make 15 to 30 bucks. So we saw kind of the opportunities here. GM, one of those opportunities, going back a little, but IBM, another one. Big rebound, can risk this level. If we go back to last quarter, here's sort of another one that I actually took here. So you can buy it after earnings and the thing sometimes just goes up, okay? Sometimes, of course, it fails. Sometimes you get a weird reaction like Tesla. Tesla's still looking, like it's holding up here, but certainly not the easiest. Sold off, came back, started to break out over that 450 important level that it has to hold, and then rolling back over. So why am I talking about Seagate? Well, because unlike a lot of other companies, like let's say Joby, okay, this is this vertical aircraft company, chart looks great. Firming up in this sort of flag where you'd want to buy it. But earnings is next week. Same situation with this uranium company. Uranium is super important for nuclear. There's a lot of companies that are in this basket. URG, ASPI are smaller ones, but UUUU is setting up here. But even still, can't buy it because earnings is just around the corner. So for that reason, Seagate just had earnings. The earnings reaction is clean. It's not one of these messy reactions, a downward reaction like Netflix, a terrible reaction like FI or LRN, and it's not a whipsaw reaction like IBM or Tesla that I just looked at. So Seagate has a clean reaction. GH is a similar one. I'm talking about all these different tickers in different sectors because they all have earnings in common. And what tends to happen is the market takes the momentum from earnings. So if earnings season is just so-so, there's not a lot of follow-through. And we saw that in Q2, where really Reddit was the only solid earnings reaction in the beginning of August. And if you look at a consumer company like Spotify that just went sideways, and then you look at the market during August, it really basically went sideways for a month until September. I mean, yes, there was some higher lows, but due to this drop right at the beginning, it pretty much gained, I don't know, maybe 1% that entire month. So there's not much to do during that time. So right now we're at an interesting time. Sell off 2 Fridays ago on the rare earth. Back and forth between Trump and Xi, and then Trump and Xi met again up here, and they're getting their soybean deal together. So, of course, we just went up 5 days in a row. So this little pullback is fine, even though it seems like everything's good. If anything, there's going to be less tariffs on China in the near term based on what is coming out of their meeting. So, with all that said, this is the opportunity that screams out right now. You can look at these other companies, WDC as well, to give an indication of this theme of storage. Pretty beautiful chart, but again, you didn't know, I didn't know that this earnings was going to be good. Looks like it's going to be good. Still has to close. This candle has to close. So this just happened, as I'm making this video in after hours. So maybe tomorrow it'll close, give an opportunity. And, SanDisk has earnings coming up in about a week. So this one is difficult to buy because how much more can you really expect after a run like this? So in my opinion, you do want to watch these other hard drive companies, Western Digital, SanDisk, but Seagate is the move. And if we look into a little more details about what they're up to, this is it. I mean, it's the story of the market for the past year, 2 years, 3 years. It's AI data center storage demand. And this narrative just continues and continues, given that OpenAI is now talking about going public. OpenAI just had that agreement, that pact with Microsoft. The details are ironed out. Microsoft stock didn't react super well to that, surprisingly. You would think they would just be screaming from the hills about how favorable that deal is for them. They get 27%-ish of OpenAI. The OpenAI employees get liquidity. They can sell their shares, which makes the employees happy, so they want to keep working there. Or, they cash out. But what you don't want is employees leaving because they don't trust that they're going to be able to get money for their shares. So OpenAI employees get a third of the company. Microsoft gets a third of the company. The OpenAI nonprofit holds a third of the company. Sam Altman gets no shares at all. Like I said, OpenAI might go public. All of this is bullish for all of the data center companies that serve the OpenAI master. And OpenAI really is the master for the reason that these big companies, their clients, I mean, Microsoft has consumer clients, but for example, Nvidia has 5 clients, right? Microsoft, Meta, AWS, Apple, Amazon, those are the big dogs. And OpenAI has 900 million clients, users, right? And so even though they're not profitable, they still have a ton of leverage for that reason. So they might be perfectly suited to go to an IPO. And if they do IPO at $1 trillion, their private valuation of $500 billion, which the secondary is currently being sold at, which is already a step up from the last round they did in the mid 100 billions. All of this is saying this whole AI bubble is still real. And as long as these companies have free cash flow and they're not buying back their stock, they're instead spending it on capital expenditures. They're spending it on data centers, that they're bookings of GPUs for the future. They're not taking on debt. So I'm not sure a bubble is the right word. So with all that backdrop, this is the play. Earnings and sales are strong. Guidance is strong. Clear level over this left side peak of 260 and clear level of this high volume day. Here's the high volume of a little over that 265. So that's the idea, STX Seagate. If you like these ideas, hit the like button. If you want to see more, hit that subscribe. And if you want to work with me, head to stockscommunity.com and I will see you in the Discord as soon as you check that out. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.